Hi there. So this is another video in the series of hire purchase and installment accounts. So in this lesson you will learn how to prepare journal entries in the book of hirer and hire vendor. So and also you will learn treatment of depreciation. Why wait? Let's begin. So guys, in this problem we have the informations like cash price, down payment, installment amount, period of installment and rate of interest. Additional information, that is depreciation also given, but we are not going to use that depreciation for the calculation of interest amount. That we used only for preparing journal entries, so need not worry about it. And of course we have to prepare the amount of interest, and last we have to prepare journal entries in the books of hirer and hire vendor. So in the step 1 we're going to calculate the interest amount. So for that you just make 4 columns. The first one for number of installment, the second one for total cash price, third one for installment paid, and then last one for interest paid. So we should start with the cash price. In the sum, cash price is not directly given, but we have the informations like 4 cars purchased by Mr. B for rupees 14,000. Then 4 into 14 we get 56,000, that is the cash price. So immediately the down payment has to deducted. It is 15,000, so just write 15,000. So for 56,000 minus 15,000 we get 41,000. One more thing, the down payment also consider as a first installment. That's why I mentioned here also. But it doesn't have any interest because it is immediately paid by the buyer, so it doesn't have any interest at all. So just you give hyphen. Come to the first installment, that is 15,000. But this 15,000 includes interest amount also. That has to be separated. So for that you just take this remaining 41,000. For this 41,000 you have to calculate the interest amount. Apply the interest rate 5%, then we get to 2,050 as a interest of first installment. Hence this 15,000 includes this 2,050. So deduct this amount and then remaining we get 12,950 as a cash price. Then come to the second installment. The second installment also we have to apply the same rule here. This second installment 15,000 includes the interest amount. So for calculating that interest amount you take this remaining 28,050 rupees, apply with a 5% interest rate, we get 1,403 as a interest at the time of paying second installment. So deduct with 15,000, then remaining 13,597 we get as a cash price. Then come to the third installment. At the beginning of third installment, as a buyer has to pay 14,453. At the time of calculating the last installment interest, we should not apply the previous rule. What we have to do here, we just apply the formula, that is installment amount, that means the last installment amount minus remaining cash price. As per our problem, the last installment amount is 15,000. Remaining cash price is 14,453. So then we get 547 as a interest of last installment. You have to be very careful while calculating the last installment. Other things are no issue. But here you have to apply this formula, last installment amount minus remaining cash price. So then you get the total interest 4,000, total installment is 60,000, 60 minus 4,000 we get the cash price. Then the calculation is right, and the total cash price at the end it should be nil. So that also right. Then move to the next step, that is preparation of journal entry. So to the learners of accounts, I strongly recommend to learn golden rules of accounts and aware of different type of accounts like real account, nominal account and personal account. So if you are thorough with those things, then you are not worried about preparing journal entries. You can just apply the rule with the transaction and you can prepare the journal entry without any error. So here we have to prepare 6 journal entries in the book of Mr. P. He is a hirer. So just imagine that Mr. P approaches hire vendor. Hire vendor name is not given in this problem. That's why we just use it as a hire vendor. So he approaches hire vendor for purchase of cars, but he is not going to pay the full amount at the time of buying. He needs 3 installments to settle all the amount. So we conclude that this transaction is purely about purchasing of asset on credit. So look at the first journal entry. So in every transactions, at least there are 2 accounts. So in this first first transaction purchase of asset on credit, there are 2 accounts. One is car, that is an asset, it is a real account. Another one is a hire vendor, he is a giver and he is a personal account. So apply the golden rule here. So according to the real account, debit what comes in. Here car is come to our firm, so car accounts are debited. So then who is the giver? Hire vendor is the giver, so hire vendor account to be credited. That's all, guys. Then move to the second entry. That's about payment of down payment. So Mr. P paid the down payment immediately after purchase of cars. So whenever there is a cash involves, another account should be a personal account, maybe an artificial person or sometimes natural persons. So here is a natural person, is a hire vendor. So here this second transactions, there are 2 accounts. One is cash, it's also real account. Then hire vendor is a personal account. So apply the rule here. Debit the receiver who receives the money, hire vendor. So his account is debited. And what goes out, cash is going out from a firm. So we mention as a bank. So to bank account. Then come to the third journal or transactions. This entry we are preparing to know our liability level. This entry is not prepared for payment of interest because in a hire purchase system the interest is not separately paid to the hire vendor. So in this calculation of interest amount, I used to say that the installment includes the cash price as well as interest. The interest does not pay separately. So in that sense, this entry is prepared to know our liability level or to whom we have to pay the interest. So here look at these transactions. Payment of interest by the previous step, we calculated interest amount for the first year, that is 2050. This entry proven that it increase our liability. Just look this. While purchasing car, the hire vendor account is credited. So in that sense, we have to pay 56,000. Again, for this interest being paid entry, again hire vendor account is credited. So 56,000 plus 2050, it comes 57,050 rupees. This is the liability at the end of first year Mr. P has to pay. So for that purpose we are preparing this entry. This entry does not mean that we are paid interest to the hire vendor. It shows the liability. Okay, that reason we are preparing this entry. So interest is a expense, that's why debited. Hire vendor is a creditor. Again we make in the credit, so the liability level is increasing. We have to pay at the end of first year 57,050. So come to the next journal, next transaction, that is payment of installment. It is the similar transaction of payment of down payment. So the same rule apply. Hire vendor account debited because he is the debitor receiver. Then bank goes out, that's why it's credited. So come to the payment of depreciation. So depreciations, involves with a expense. Okay, depreciation is an expense and it reduces the value of asset. So that's why depreciation account is debited. It's a nominal account and it affects the particular real account. Okay, real account value is reducing, that's why it's the car account is credited. Okay, then come to the last journal, that is a transfer of profit and loss account. So after we made all the entries, we have to look at what are the entries make an impact on profit and loss account. Just to see here, only the interest and the depreciation, these two entries make an impact on profit and loss account. These two are expense nature, that's why in the profit and loss account these two appears in the debit side. So make a profit and loss account debit, then these two to be credited. It means it reduces the profit. In case before these two entries, in case the profit is 10,000, after this entry the profit is reduced. Okay, then move to the step 3, journal entries in the books of. So guys, on the step 3, on your right side I have mentioned the transactions from step 2. That's the view of buyer. So in the middle I have mentioned the transaction, the view of seller. So you can easily compare how the things are changing the view of buyer to seller. So if you take the first transaction, buyer says it's the purchase of asset, but in the seller says it's a sale of goods. There is a difference between asset and goods. Here the buyer is a Mr. P. He purchased a car for his personal use or for his official purpose, but he is the ultimate user. But here seller, they are dealing with the cars. They used to sell the cars. They may be a manufacturer of cars or dealers of cars. So car is an asset to them. They are not a ultimate user. They are just selling the product. Okay. So in that sense, they says it's a goods. So here Mr. P didn't pay the amount after purchase. So he takes a time of 3 installment he needs to pay. So that's the reason seller considers a credit sales. So you take the first journal entry, debit the receiver. Okay, Mr. B is the receiver, so his account is debited, and sales, it's a income, it's a nominal account, always income to be credited. Since it's a sales made through installment, it mentioned as a higher sales, so its account is credited. The second transaction is all about receiving of down payment. So debit what comes in? Bank account. And who is the giver? Mr. P is the giver, so credit is account. That's simple. So the third transaction is all about interest being received. So in this previous step itself I told you we need not to prepare a journal entry for interest received or interest paid, because in this hire purchase system interest alone cannot be paid or received. It always comes with installment. So that's the reason we need not to prepare separate entry. But this entry is prepared to know the original value of debtor. Here you can see that while sale of goods, the value of debtor is 56,000. Here Mr. P is a debtor to hire vendor. Okay. Then after 1 year, with the add of this interest rate, you can add these two. Okay, because these two all in the debit side, no, that's why you can add. So it comes to 57,050. So by knowing this value, we are preparing this journal entry, and also we get one more advantage. While preparing this, we know that how this income affects the net profit. That's why the interest income is transferred to profit and loss account. For knowing these two reasons, we have prepared this third journal entry, not for anything else. So the fourth transactions, installment received, it's a similar of down payment received. Here debit what comes in, cash is received by the hire vendor, so bank account is debited, and who is the giver? Mr. P is the giver, credit the giver. The next one is payment of depreciation. So In the book of seller, you need not to prepare the entry for depreciation because the product, the goods already sold to seller is responsibility to maintain the depreciation account. The seller need not to maintain the book of depreciation. So the last one is a profit and loss account. So we have to check it here, this previous journal entries. Any transactions related with the profit and loss account, any transaction may impact on profit and loss, then that has to be transferred. Here only thing that is the interest. That interest is an income nature. That's why here the profit and loss comes in the credit and interest become a debit one. So transfer here, then we get the real net profit. Just I make a comparison of all the entries we made in the step 2 and step 3. You can see how the entries are changing in the book of buyer and seller. So we prepared 6 entries in the book of buyer and 5 entries in the book of seller. The first 2 entries may not repeat in every year, but the remaining 4 entries should be prepared for all the years. In this sum we have 3 years of installment. So we have to prepare these 4 entries for all 3 years. Here we prepared only for 1 year. So you try it to your home, prepared for next remaining 2 years. These are the points to remember. Look at this, keep it in your mind while preparing hire purchase system of accounts. Thank you.